Hey traders, let's talk about a 5G stock and the crowded trade. So when we talk about crowded trades, we can look at this 5G stock, INSG, for example. And what I mean by that is everyone wants 5G, 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 5G. Very popular right now. They want like that cheap stock, low dollar stock, I should say, that can go up tenfold. Well, I hate to say it, but that usually doesn't happen. INSG, people were all getting hyped up about it. It was mentioned on TV. The CEO was actually just on Cramer, I believe, yesterday. And the stock ran from about 10.5 to about 14.5 bucks, like that. Stock had earnings, and what happened? Everyone's long up here. So everyone is long. We'll even give them a smiley face. Yay, I'm going to the moon. Shh, we'll call this smoke and mirrors now. Whoa. I don't know how that was smoke and mirrors drawing. But when everyone gets long, what happens? The rug gets pulled and they go, and start to cry. Because now they don't know what to do. They're stuck long from 14, the stock's at 12.58, and they're hoping and wishing the stock goes back up so they can get out and just break even. Well, welcome to the crowded trade. And there's multiple stocks that when we usually get into the summer months, these growth stocks, or especially these names that have been very crowded, where everyone's poured into thinking they're going to be the next, Google or Amazon, they get liquidated, and they get liquidated sold. No matter what earnings are, they're going to sell them, because the smart money is saying, well, if we bought Fastly at 40 bucks, let's say in this range, and it goes to 80, we're selling. If it goes to 100, we're selling. If it goes up here, oh my goodness, we are already out all our position. And now the mom and pop, or the average Joe, or your Robinhood trader, is thinking, now's the perfect time to buy. They get all happy again. Oh, he's got a messed up eye. I'm going to 200 or 300. And then next thing you know, they get stopped out or margin called, and the stock gets sold off. And these are big moves. 100 to 76 bucks, that's a big move lower with no signs of a bottom in sight. If you look at stocks like the Datadog, from 90 to 78, or DocuSign, these are big moves to the downside from the highs, where a lot of people have thought these were big high-flying stocks. Like Jumia is a prime example. The stock was in the 20s. Now it's around 18 bucks. It's just when everyone gets long something, when the trade gets crowded, when everyone's on the boat and thinking they're all going to go party in the Keys, that boat usually gets a leak and starts to sink. So be careful at the market here. We're going into summer. We are in summer. We're going into the late stages in this growth stock rally. And usually when you get into August, mid-August, you start having money get pulled out of growth, which is usually tech names, and they rotate into value, like IVE's the value ETF. So banks, energy, boring stocks, to be honest. And we're done with all the big tech earnings. So it makes sense. You just have to realize something doesn't always go straight up. So you always need to be nimble and learn how to rotate and always stay on your toes. Subscribe, catch you on the next one.